You know that feeling you get sometimes when the financial news looks a bit, shaky?
Yeah, that uncertainty.
Right. Maybe it even takes you back to 2008 when everything felt so, well, fragile. And even now it feels like a roller coaster sometimes, navigating the economy.
It definitely can.
What if you could actually build real financial security, like an inner calm that doesn't get rattled every time the market hiccups?
That's exactly what we're digging into today. We're doing a deep dive into the audiobook Unshakeable. It really lays out a path, not just for building wealth, but um, finding genuine peace of mind despite all the economic ups and downs.
And something that jumped out at me right away, all the proceeds from this specific audiobook, they go to Feeding America.
That's right.
It just shows this really interesting link between, doing well financially and actually making a difference. It's not purely about personal gain.
Exactly. And our goal here, for you listening, is really to pull out the essential wisdom from Unshakable. We want to give you a clear framework, something understandable, so you can navigate your finances with confidence without being overwhelmed by, well, anxiety.
Right.
Honestly, even if you just focus on one key area we talk about from the book, it could make a really significant difference.
Okay, so let's jump into that first big idea from Unshakable. This power of having an unshakable mindset. What does that actually mean, being unshakable with money?
Well, fundamentally, it's about having this deep confidence, right? A sense of peace, even when things get choppy in the markets.
Mm.
We all see the swings, but the key is not letting fear grab the wheel. It's
Mm.
about staying centered, getting back on your feet quickly if things get turbulent, and maybe even spotting opportunities when, everyone else is panicking.
So it's less about the dollar amount, the actual number in your account, and more about your whole approach, your mental game.
Precisely. The book really hammers this home. Your mindset is the foundation. You could have a lot of money, but if you're constantly worried, you're not really unshakable, are you?
No, definitely not.
But someone with, say, a clear understanding and a calm perspective, they can handle financial challenges much better almost regardless of where they are financially right now.
There's this story in Unshakeable, it really grabbed me. The author talks about chatting with Alan Greenspan, former Fed chair,
Oh, yeah.
and asking him, if you were put back in charge today, what would you do? And Greenspan just says, resign.
Wow. That's telling. What do you take from that?
Well, it just screens uncertainty, right? Even for the people who are supposed to be the absolute experts. If he feels that way, it kind of shows how tough it is for any of us to perfectly predict or, control where the economy's going.
That's a great point. And it perfectly sets up what Unshakable tries to do.
Mm.
It offers these fundamental principles, right?
Hmm.
Gathered from talking to top financial minds over like 7 years to help you find some solid ground even when things feel uncertain.
Okay. Now, the book mentions these two ferocious foes that can really mess up our financial success. What are they?
Well, the first one we've kind of touched on already. It's fear. It
Right.
can just freeze you. Or worse, make you make rash decisions, like selling everything when the market dips. That can seriously hurt you long
Oh,
term.
yeah, that gut reaction to just protect yourself when things look bad is so strong. So what's the second foe Unshakable warns us about?
The second big one is fees. These are the costs tied to financial products and advice that are often hidden, or at least really hard to understand.
Yeah.
And Unshakable makes the case that these fees can just quietly eat away at your investment returns over time, like a major drag on building wealth.
Okay, fees. We'll definitely circle back to that. Let's move into what the book calls the wealth rule book. First principle, the amazing power of compounding. We hear about it, but the example they use really makes it hit home.
It really is like financial magic almost. The book uses this great story. Two friends, Joe and Bob, both invest $300 a month consistently.
Okay.
But Joe starts young, at 19, and he only invests for 8 years. Stops completely. Total invested, $28,800.
Just 8 years. Okay.
Bob starts later,
Yeah.
at age 27. He invests that same $300 a month, but he keeps going until he's 65.
Oh.
So he puts in way more money, nearly $140,000. Almost 5 times as much as Joe.
And the results are pretty staggering, aren't they?
It's totally staggering. By the time they both hit 65, Joe, who started early and stopped, ends up with significantly more, like over $1.86 million,
Wow.
compared to Bob's $1.59 million, even though Bob invested way more money for much longer.
So Joe invested less, stopped early, but still ended up with more.
Yes, because those early dollars had so much more time to compound, to grow on themselves. The takeaway is crystal clear. time in the market is incredibly powerful. Starting early, even small, can beat starting later with much bigger amounts. Just start now.
That really nails it. It's not just how much you save, it's when you start investing. And Unshakeable is really clear. You can't just earn your way to financial freedom. Investing, letting compounding work, that's the real engine.
That's such a key point. Earning a good income is great, obviously, but it's what you do with it. Investing it wisely, letting it grow exponentially, that's what builds real lasting wealth. The book even mentions a mobile app, Unshakeable.com, that's supposed to help you figure out, how much you need to save and invest based on your goals.
Handy. Unshakeable also touches on how much you actually need for financial security. They mention like maybe 10 or 15 times your annual income, but they sort of lean towards 20 times as being more realistic. That can sound huge.
It can seem intimidating, yeah. But think back to Joe. He hit almost $2 million, starting with pretty modest amounts and then stopping. It shows it is possible over the long haul with consistent investing and, well, that compounding magic. It's a marathon, right?
Definitely marathon.
Yeah.
Okay, next up in the Wealth Rule book is understanding how markets really work. Unshakeable has these 7 freedom facts. Let's start with number 1. Market corrections are normal.
This is so important to internalize. The book explains these market drops corrections, usually defined as 10% or more off the highs in something like the S&P 500.
Right, the big U.S. companies index.
Exactly. Those drops are actually pretty common, historically maybe every 3 to 5 years, something like that. But here's the key thing. Most of them, like 80%, they don't spiral into a full-blown bear market, those really nasty, prolonged downturns.
Okay.
So the big takeaway for you is, don't freak out and sell everything when the market dips 10%. It's usually just part of the normal cycle.
So that instinct, that urge to just pull everything out when things look red, often the wrong move.
Often exactly the wrong move.
Yeah.
If you jump to cash during a correction, you're very likely to miss the recovery that follows. Just understanding that these dips are normal helps you stay calm and avoid those emotional mistakes.
Okay. Freedom fact number 2. Nobody can consistently predict the market. This kind of blows up the whole idea of trying to time things perfectly.
It really does. Unshakeable flat out debunks the myth of market timing. They quote that famous line, "Prediction is very difficult, especially about the future."
That goes, yeah.
And they even use the example of Nouriel Roubini, Dr. Doom, right? He famously called the 2008 crisis.
He did.
But he's been wrong plenty of other times. It's just a good reminder. Be really skeptical of anyone claiming they know exactly where the market's headed next.
Good advice. Fact 3 gives a bit more optimism long term. The stock market rises over time.
Yes, absolutely. Despite all the bumps and bruises along the way, the overall trend, historically, is clearly up. The book points out, I think between 1980 and 2015, the S&P 500 finished the year positive in 27 out of those 36 years.
Wow, that's most years.
Right. And that's even though the average drop within each of those years was over 14%. It just shows the market's underlying resilience, its growth potential over the long term.
Okay, fact 4. Bear markets. Those bigger, scarier downturns they happen, they're inevitable, but they're temporary.
Exactly. Unshakeable notes that historically, the S&P 500 drops about 33% on average during a bear market. Sometimes it's worse, like over 40%.
Ouch.
Yeah, they feel bad. But history shows, again and again, they always end. They're followed by recovery and eventually new highs. Always.
That's comforting in a way. Okay, fact 5 is fascinating and
Yeah.
maybe counterintuitive. Missing just the best days in the market is incredibly costly.
It's shockingly bad for your returns. The book cites data, I think 1996 to 2015 again. If you missed just the 10 best trading days in those 20 years, your average annual return got cut almost in half.
Half. Just missing 10 days out of 20 years.
Yeah. And if you miss more, like the top 20 or 30 days, your returns basically evaporate. And here's the kicker. A lot of those best days happen right near the worst days, often during really volatile periods.
So if you panic and sell during the worst days.
You're almost guaranteed to miss the huge rebound days that often follow closely behind, which leads right into fact 6. Time in the market beats trying to time the market. Unshakeable shares this study from Schwab. They looked at investors over 20 years, one with perfect timing, one with terrible timing, one just average. The amazing thing, even the investor with the absolute worst timing still made significantly more money than someone who just stayed in cash the whole time.
Wow. So even if you buy at the peaks, basically.
If you stay invested long enough, you still come out way ahead of sitting on the sidelines. It just powerfully shows the benefit of staying put for the long term.
And the last one, fact 7, kind of reframes those downturns. There's always opportunity.
Exactly. Those corrections, those bear markets, yes, they're unsettling. But for patient, long-term investors, they can be great opportunities to buy quality investments at cheaper prices. It's about shifting from fear to seeing potential.
Okay, that market reality check is crucial. Now, let's circle back to the other foe, the cost of fees. Unshakeable really dives into this, and it seems like a massive blind spot for most people.
It's actually alarming. The book throws out these stats, like 71% of Americans think they pay no fees in their 401k retirement plans.
71% think they pay nothing.
Nothing. And another 92% have literally no idea how much they are paying. It's crazy. The book compares it to, like, imagine a clothing store with no price tags.
Oh.
Unthinkable.
Yeah, totally. Why is it so hard to figure out? Why the lack of transparency?
Well, Unshakeable points to a few things. First, those disclosure documents. They're often insanely long, 30, 50 pages sometimes, and full of dense technical jargon nobody understands. Then you've got conflicts of interest. A lot of advisors or brokers get paid commissions to sell specific products, which might not be the cheapest or best for you, the client. They might have incentives pushing them towards higher fee options.
Right. And what about this revenue sharing thing in 401ks, or pay to play, as the book calls it?
Yeah, think of it like grocery store shelf space. Some investment fund companies actually pay the 401k provider, like your employer's plan administrator, to get their funds included in the menu of options you can choose from.
So they're paying to be offered.
Kind of, yeah. And that can mean the plan might feature funds that are more expensive because the provider gets a kickback instead of maybe offering the absolute lowest cost or best performing options available. The book even mentions crazy markups, like fund fees being 1,300% higher than they could be.
1,300%. That's insane. Does having a self-directed 401k help avoid this?
It can give you more control and access to potentially lower cost things like index funds. But Unshakeable warns that even those can have hidden fees. They give an example where a provider charged an extra percentage just for the privilege of having the self-directed option. You still have to be careful.
Man, it really sounds like a minefield. The book mentions lawsuits are increasing against 401k providers over excessive fees, so maybe awareness is growing.
It seems to be, and Unshakeable suggests a key step for individuals and companies. Benchmark your plan. See how your fees stack up. They mention America's Best 401k as a place that does this, suggesting that just getting clarity can often lead to finding ways to significantly cut those costs.
Okay, that makes sense. Which leads perfectly into the next big topic in Unshakeable. How do you find financial advice you can actually trust? Advice that's free from these conflicts. Because there's definitely a lot of distrust out there.
Oh, huge amounts. The book cites these polls showing financial institutions have approval ratings even lower than, like, Congress sometimes. And it mentions the billions, hundreds of billions major firms have paid in settlements for misconduct over the years. It doesn't exactly inspire confidence.
No kidding. So Unshakeable makes this distinction. A lot of people calling themselves advisors are actually brokers. Why is that difference so critical?
It boils down to their legal obligation. Brokers are essentially salespeople. They get paid commissions for selling products. Their main duty is often to their firm to sell stuff, which might not always align perfectly with your absolute best interest. There can be pressure to hit sales targets.
Okay. Whereas Unshakeable talks about finding a fiduciary. What does that mean?
A fiduciary specifically, they mention registered investment advisors, or RIAs, has a legal duty to put their client's best financial interest first. Always. It's a higher standard of care than the broker standard.
That sounds like what you'd want.
Definitely. But Unshakeable adds a caution. Even some fiduciaries can have conflicts, like maybe they recommend their own company's expensive funds. So you still need to dig deeper. But that fiduciary standard is the baseline you should look for. Only about 10% of advisors are fiduciaries, apparently.
Only 10%. Wow. Okay, so how do we find one of the good ones? Does Unshakeable give guidelines?
Yes, it lays out some key things to look for. Competence, obviously, they know their stuff.
Right.
A comprehensive approach, not just investments, but your whole financial picture. Experience with people like you. Do you align philosophically? Like, do they believe in market timing, or are they skeptical like the evidence suggests you should be? And crucially, can you verify they are truly committed to your best interests, minimizing those conflicts? The book mentions creative planning as one example of a firm aiming for that conflict-free, comprehensive model.
Got it. Okay, let's shift to the core 4 principles of the world's best investors from Unshakeable. Number 1 sounds simple but profound. Don't lose money.
Yeah, Paul Tudor Jones, the legendary investor, is quoted saying defense is 10 times more important than offense. It really highlights how unpredictable markets can be. The main idea isn't just chasing huge gains, it's protecting your capital first, guarding against big unexpected losses.
Oh, how do you do that?
Well, one strategy mentioned is looking for undervalued assets when everyone else is pessimistic and fearful. Buying when there's metaphorical blood in the streets.
Okay, principle number 2, asymmetric risk reward. Break that down for us.
It basically means looking for investments where the potential upside, the possible gain, is much, much bigger than the potential downside, the possible loss.
So low risk, high potential reward.
Ideally, yeah. Or at least the reward potential significantly outweighs the risk you're taking. Unshakeable gives a personal example of investing in something called first trust deeds after the 2008 mess,
Yeah.
where the risk seemed relatively contained compared to the potential for solid returns.
Makes sense. Third principle, tax efficiency. It's not what you earn, it's what you keep.
Exactly. Taxes can take a huge bite out of your investment returns over time. So minimizing that tax drag is critical. Unshakeable mentions things like MLPs, master limited partnerships, as one example that can offer tax advantages, but it also notes they're complex and not right for everyone.
Okay. And the fourth core principle, a classic, diversification. Don't put all your eggs in one basket.
It's fundamental, absolutely bedrock. Unshakeable quotes tons of legendary investors all saying the same thing. You have to diversify, spread your money across different types of investments, stocks, bonds, real estate, maybe others,
Why is that so critical?
because different assets perform differently at different times. If one area gets hit hard, others might hold up or even do well, cushioning the blow to your overall portfolio. It reduces risk without necessarily sacrificing long-term return potential. The book says the next chapter really digs into how to build that diversified portfolio.
Good to know. Now, Unshakable takes another interesting turn, talking about the enemy within, mastering your mind. This sounds like psychology.
It absolutely is,
Right.
and it's maybe the hardest part for many people. Unshakeable shares a really personal story about a health scare, a misdiagnosis, to show how powerful uncertainty and fear can be emotionally.
Yeah, that was intense.
And it connects that directly to the fear people feel in the markets. That fear triggers our primal survival brain, often leading us to do exactly the wrong thing, like selling low during a crash.
The book talks about specific biases like recency bias and overconfidence. How do those trip us up?
Recency bias is just our tendency to think whatever just happened will keep happening. So if the market's been going up, we assume it'll keep going up, maybe causing us to buy high. If it drops, we panic and sell low, thinking it'll keep dropping.
Okay, makes sense. And overconfidence.
That's thinking we're better than average at picking stocks or timing the market. Most people aren't. Unshakeable strongly recommends what many great investors advise for regular folks. Just invest in low-cost, broad market index funds. Don't try to be a hero.
Simple but effective. Unshakable also stresses global diversification and having a written plan. Why are those important for mastering the mind part?
Going global reduces risk further. You're not betting everything on just one country's economy or market. The book uses the example of Japan's market, which crashed decades ago and still hasn't fully recovered, to show the danger of having all your eggs in one geographic basket.
Good point. And the written plan.
Having a clear written investment plan and actually understanding why you own what you own acts like an anchor. When things get scary, you can look at your plan, remember your long-term strategy, and resist making impulsive, emotional moves.
That seems really valuable. Okay, finally, Unshakable broadens the lens, talking about real wealth beyond the financial. This feels like a crucial shift.
It really is. It makes the point that just having money, even achieving financial freedom, doesn't automatically equal happiness or fulfillment.
Yeah.
It uses the incredibly sad example of Robin Williams to show that massive success without that inner sense of well-being is, in the book's words, the ultimate failure. It argues that true, real wealth includes your emotional, psychological, even spiritual well-being. You have to prioritize that, like putting on your own oxygen mask first.
That's powerful. The book talks about being in a beautiful state versus a suffering state. Can you explain that?
Basically, a beautiful state is when you feel joy, gratitude, peace, love. A suffering state is when you're dominated by stress, anger, fear, worry. Unshakable argues that our state is mostly determined by what we choose to focus on.
Our focus determines our state.
Largely, yes. It shares this funny little story about being on a flight, the internet goes out, and instantly feeling frustrated and suffering over something trivial, just because expectations shifted. The point is, we often create our own suffering unnecessarily. We can decide to let go of suffering and actively cultivate appreciation.
How? The book gives a couple of techniques, right? The 90-second rule and priming.
Yeah, two simple tools. The 90-second rule is first, notice the physical feeling of suffering, starting maybe tension in your shoulders, jaw clenching. Then give yourself literally 90 seconds. Just focus on your breath, detach from the stressful thought for that minute and a half. Then consciously shift your focus to something you appreciate. Anything.
Okay, 90 seconds to reset. And priming.
Priming is a quick ritual, maybe morning and evening. Just take a minute or two to actively think about and feel grateful for three specific things. Could be small things, big things. Doing this consistently rewires your brain, basically, to look for the good, reducing stress and building that baseline of gratitude.
That sounds doable. And the story of Alice Summer in the book, the pianist who survived a concentration camp. It's just incredible.
It's breathtaking. Her ability to find joy and appreciation, even after experiencing the absolute worst of humanity, is such a powerful testament. It shows that happiness is an inside job, not totally dependent on external circumstances.
Wow.
And Unshakeable really concludes by saying that living in that beautiful state is the ultimate prize. And that the real secret to living isn't just getting, it's giving your time, your care, your compassion, not just money. It ends with Sir John Templeton's wisdom. The secret to wealth, gratitude.
That's a profound place to land. So, wrapping up our deep dive into Unshakeable, it's about mindset, first and foremost. Understanding how markets really work, not how fear tells you they work. Being super aware of fees. Finding advice you can actually trust.
Right. Sticking to those core investment principles like diversification. Mastering your own psychology, that's huge. And remembering that real wealth is so much bigger than just the bank balance. It's about that inner state, that well-being.
Exactly. And the key now, for everyone listening, is putting this knowledge into action. That's where the real transformation happens, leading to financial freedom and that unshakable inner peace we started with.
Couldn't agree more. Understanding is step one, doing is step two.
This has been incredibly insightful. Definitely worth revisiting these ideas as you navigate your own financial journey.
Absolutely. And as you do, just remember that core message. You are more than your money. You have the power within you to cultivate peace, make wise choices. You are truly unshakable.